So if you weren't aware, markets change over time, meaning that the way the markets are moving now is different from the way that they moved 10 years ago, and I'm sure 10 years from now, they'll be moving different as well. So what does that mean for trading? Well, that means as a trader, we should evolve as well, not just because of the markets, but also because of our natural growth mindset and our desire to become the best at what we're doing and eventually solve that unsolvable puzzle. In today's episode of the Trading Coach Podcast, we're going to talk a little bit about the evolution of a trader and how I've personally switched and grown and developed my trading strategy from where I was at 15 years ago to where I'm at today. Paul says, do you still trade your first back-tested profitable plan, or did you have to modify it to keep up with the change in the market? Well, my first tested profitable back, no, I don't. So without making this a long drawn out story, because many of you guys have heard this before, but you guys remember my first back tested profitable plan was that not automated, was a system strategy. So it was a trend continuation system that involved arrows, red arrows that told me when to sell, green arrows that tell me when to buy, and the whole thing where it was psychologically I couldn't trade it consistently because targets would be like 600 pips away, then it would be like up 400, and then it would go reverse and get stopped out. Then I get frustrated. The next time it was up 400, I'd take profit. Then it would go to plus 600, and I miss out on 200 pips of profit, and then I didn't agree with it. So no, not my first back tested plan at all. That was a completely different. That was kind of before I understood what type of trader I wanted to be. That was back when I was like just looking for the first thing that made me profit. Now, I think the question is more geared towards the evolution of a trader. And yeah, you have to adjust as a trader. Markets are changing. We have gone from much more directional markets to much more consolidative markets. We have gone for markets that have a lot lower volatility than they did 10, 20 years ago. Markets are always changing. In my personal plan, the core hasn't changed. So the core is support, resistance, structure, right? The core hasn't changed. What I've done is I've gotten better at profit taking, at picking levels, just because my prediction skills are a lot better than they were 20 years ago. So my prediction skills are a lot better. So I've gotten better at profit taking. I've gotten more aggressive with entry. So in my first CTS, which would be my price action trading plan, I required structure, Fibonacci, RSI overbought, RSI divergence, and a double top or double bottom. If I didn't have all of those things with structure, Fibonacci, RSI overbought, divergence, if I didn't have 5 of those things, I could not take a trade. And you can imagine, what do you think with all of those strict criteria? What do you think? I guess I'm trying to word this without giving away my answer. How do you think my trading was? It was aggressive, conservative. How would you kind of rate that? With all of those criteria, how would you rate my trading? You'd probably say it was pretty conservative. Yep. Dennis says 6 trades per year. Not many options. Yeah, there weren't a lot of options. Pretty conservative. But remember, I needed that because before that, I was a reckless gunslinger, right? Pow, 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 right? I was a reckless gunslinger just over trading. So I went from the extremes. I went from super over trading to, I don't want to call it under trading because I was following my plan, but to not a lot of opportunities in trading. I needed to be very strict because that was the only thing that can keep me under control. I needed a very small jail cell where I didn't have a lot of freedoms. And with that conservative nature, right, I was taking more than 6 trades a year, but I kept noticing, and you see me do this today, where I look at the chart and I'll be like, hey, guys, that's a good opportunity. And I'll be like, but I can't take it, right? And it sucks. Imagine that times like 50. I would see all these opportunities, and as I was getting better, and again, I don't have any regrets. I think this is the natural progression where I had to start slow, crawl, walk, run. Yeah, crawl, walk, run. But I was seeing all these opportunities where I predict levels, and I'd be like, man, I know it's, well, I don't know, but like in my head, like I know it's going to stop here and it's probably going to bounce to there. And I would look at it and it would do it. And everyone would be like, well, Akil, nice call in the trade. How much money did you make? I'd be like, nothing. Couldn't get involved. Why? My rules, right? all pouty face and stuff like that. Seriously, I'd be pissed off, man. I'd be pissed off. Like it's like, you want to make money in the market. Let's be real. Process over outcome, all that fun stuff. Yeah, but I want to make money in the market. It sucks to look at something and like, it's like placing a bet where it's like, man, I would have played those lottery numbers, but I didn't. And now someone else won. Like, pisses you off. So I'll be all sitting there pissed off and bitter. But again, it was for the better because I was a reckless gambler at the time. But observation in the market, and the same thing we talked about in yesterday's Q&A, right? Remember we talked about the market replay for you guys that saw the Q&A session yesterday? We talked about the market replay and a very specific way to practice making predictions, right? As I would do that on a daily basis, yeah, practice. We're talking about practice, right? As I would practice on a regular basis, off hours, as I would get reps on the charts on hours, my predictive skills got better and I started noticing tendencies. And one of those tendencies that I noticed was like, hey, I'm missing a lot of trading opportunities where I'm waiting for this double top or double bottom, but the market doesn't give me that. It reverses more aggressively and just gives me like a 3-bar reversal. And then one day I woke up like, what if you were allowed to take 3-bar reversals? You'd be in more of the trading opportunities that you'd want to be in. You still have the second strike of taking a double top or double bottom if you missed it, if you were sleeping or didn't meet the risk reward. And it didn't really add any more, too much more risk, or let's put it this way, the reward was worth more than the risk, right? So a 3-bar reversal is a more aggressive entry than a double top. Would you guys agree? In general, it doesn't mean in general, it's a more aggressive entry than a double top. A double top is going to give you a little bit more confirmation, which is going to keep you out of slightly more losers, I would say. But it's also going to, the opportunity cost of waiting for a double top and not taking a 3-bar reversal is going to keep you out of more winners as well. So now the balance is this. Is missing more winners worth the keeping myself out of more losers? And it wasn't, right? Even if I took on a little bit more losses, the wins that I made by having that more aggressive entry made up for it. So it was net profitable. And those are the things you got to do in your testing and run the numbers. So eventually, after I had that theory and that moment, you go back, you test it, you compare, blah, 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 all that fun stuff. And then you adapt, if everything checks the boxes, right? So if I think with Dennis asked a question, Dennis goes back and says, hey, you know what? This entry technique allows me to have more frequency, get involved in more trades. Maybe my win percentage is lowered a little bit, but my overall profitability is higher. This is a net positive for my trading, and it's a natural progression to a more aggressive style of trading, which I think many of us naturally do. Right? I was speaking to a trader this morning who, I don't have my phone in front of me. He was giving me a weird metric. I didn't quite understand it, but it could be the terminology. Have you guys ever heard of real risk reward? He was giving me a metric on real risk reward. And anybody heard of that? I wasn't quite sure what it was, so I asked him. But I think it was, he said there was some type of system that he used. And I think it was, from what he told me, it was very, I think it was more like maximum favorable excursion, ORSI. So I wouldn't personally call it real risk reward, but it was, I think the comparison it was making was he was looking at his system and what he got from the trade. I don't know any of the details of how he traded, but he was looking at his system and what he got from the trade versus, I'm trying to remember the quote, versus what he would have made from the trade if it was open until the end of the week. Now, there's all types of questions with why the end of the week, right? Why are we putting a time constraint? Why not? I don't think we should base trades off of, if you're a day trader, end of day makes sense because you want to be in and out the market. But if you're a swing trader, like why end of week, right? What if there's more? Like I believe in price point targets. I don't believe in time-based targets. I mean, like I'm going to hold this for 7 days. Well, what if it makes max profitability in 4 days? Or what if it takes 13 days to get there? But that's a whole different story. But I think it seemed like it was more closer to maximum favorable excursion, meaning what his system was telling him was, here's how much you could have made on the trade versus how much you actually made. That's what it sounds like. But he was asking for advice on this, like, hey, should I adjust my system and do the real risk reward in typical Akil fashion? I was like, I don't know. Like, should you? Like, I sound like an a-hole when I do that. I said it more politely, I promise. But like, that's the real, like, I can't answer those questions for you. Can I answer those questions for you? Orsi's like, Akil, should I trade double tops? I don't know. Should you, Orsi? Just like Dennis's question earlier, higher high, higher close, entry? You tell me. Not my trading. I can answer for myself. I can't tell you yeah. I can't tell you no. But the thing I pointed out after saying, I don't know, should you? Like, is, well, you want to make the comparison. What does, if you're shooting for a larger target, there's something that naturally comes with that larger target. What is that? If you're shooting for more, the further you shoot for a target, what automatically gets lower? It has to. Larger your target profit, your waiting for you guys to say it. Type it in. Yeah, your strike rate, your win rate is going to decrease. Right? Think about for you guys that do multiple contracts, like a target 1 and target 2. Can your target 2 ever have a higher win percentage than your target 1? Impossible. Right? Because it literally has to go through target 1 to get to target 2. It's impossible. It's impossible. So you're always going to have that sacrifice where it's like, hey man, I'm making a lot more profit if I'm maximizing my real risk reward and holding this to the end of the week. But I was like, understand there's something's going to give. Like you're probably going to have a lower win percentage. And you have to ask yourself, is the lower win percentage worth the more profit? And many would automatically say, yeah, but it is a scale. There is a point where psychologically a low win percentage has an effect on you, which will affect your profitability. But understand, I guess the point is, as we grow and we evolve, those are some of the things that we have to consider. I'm adding this. This is the give, or this is the take. I'm adding this, but in order to add that, I'm sacrificing something else. And is that sacrifice worth it? Right? I'm adding more frequency, which is more aggressiveness, but maybe I'm lowering my win percentage in the process. But I should also be raising my profit. And then it's like a business decision. When a business, if you guys have a business, when you make an investment or something, or you start, you launch a new product, you have to weigh all the costs. Like, hey, these are, this is the benefit. This is the risk. Do we think it's a smart business decision? But yeah, so it grows like that, Dennis. It starts off the core concepts of my trading philosophy are exactly the same. It's the small little things on the perimeter that get slightly tweaked and adjusted as you grow as a trader, but as also the markets change. It's kind of it's a cool process once you look back and see what you did, because they're small changes, but they're small changes that kind of build up and add over time. So good question. Good rant to start off the week. Hope you enjoyed the show. If you want to be a part of what we're doing here at Tier 1 Trading, I recommend heading over to our website, www.tier1trading.com. Check out that risk-free 14-day trial membership that gets you on the platform. It gets you into our live sessions and gives you access to a lot of resources and, of course, the greatest community of traders in the world. So www.tier1trading.com. Start with that risk-free trial membership. No sneaky auto bill or anything like that. You just get 14 days on the platform to try stuff out. Then after your 14 days are up, you're kicked off. So see you there.